Hello, and welcome to the May market update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. April was a strange month. It was a good month for markets. We saw markets around the world go up. U.S. markets were up by double digits. International markets were up by less, but hey, a win's a win. But at the same time that was happening, we saw the economy continue to get hit. We saw millions of jobs lost every week. We saw businesses shut down across the nation, and we saw the economy in the first quarter was reported as shrinking at almost 5% on an annualized basis. And we know that the second quarter is going to be worse. So how do we reconcile those two things? Well, I think the big thing here is to recognize that we're seeing real progress pretty much across the board. For the virus, for example, at the start of the month, it was spreading at about 17% a day. Now we're down to less than 3% a day. That is serious progress. We're seeing testing capabilities go up from 100,000 a day at the start of the month to 200,000 a day at the end of the month. Again, not where we need to be, but significant progress. We're seeing treatments that are now in testing that we didn't even know existed at the start of the month. In fact, there's been so much improvement on the virus that states are now starting to talk about opening up. And that's a good thing because the economic damage is much worse at this point than the virus. If you look at the job loss, we're seeing millions of jobs lost every week. But even there are signs that things are, I don't want to say good, they're not good, terrible, but less bad. We seem to have seen job losses peak, and they're starting to come down. Again, a good sign. We're seeing the federal stimulus, which hadn't even been passed at the start of the month, that's starting to come through and put money into people's pockets. It's starting to help businesses stay open. And even as we do see states starting to open up again, that should bring employment back. In other words, we may be through the worst of it for the economy. And that is significant progress as well, even though the damage continues. And that is what the markets were reflecting. This is why markets bounced. When we first had the epidemic, we didn't know if it was going to be controllable, and we've controlled it. We didn't know if we were going to get a depression, and that's what markets expected. But instead, now markets are saying we're going to get a recession, not a depression. And more recently, markets have said maybe the recession won't even be that bad. Right now, it looks like markets are expecting a full recovery in a year or less. That seems pretty optimistic, but it's real progress that markets are thinking that. And that's something we need to keep in mind. Now, that said, we're not out of the woods yet. The epidemic is still spreading. It's not yet under control, although we're getting close. We think the economy is going to come back, but we don't know that yet. And we see the market has recovered substantially. We also know we have to expect more volatility. We're not out of the woods yet, but we have made significant progress. We just need to be aware that we're not there yet. And with that said, though, we enter May in a much better place than we were a month ago. We are moving the epidemic under control, and that's progress. We are thinking about opening the economy up, and that's progress. And markets are indeed looking toward the future rather than pricing in a depression. We are in a much better place than we were. We have made real progress, and we're in a position to keep making that progress. And that's a good place to be. That's it for this month. Check in again next month in June, and we'll talk then. In the meantime, if you want a daily update, check out my blog, The Independent Market Observer. Until then, stay healthy, stay sane, stay safe. Thanks for watching. We'll get through this together.